CEO of Stallion Uranium. The symbol, I got to ask you about the symbol. So I get it, Stallion, with the STU for, uranium. Stud is the symbol. How did you get stud?
It came around. Our very first asset was a gold asset called Horse Heaven. So that's where we got Stallion, and stud was going to be something that resonated obviously with Stallion, and the breeding and best of class, that sort of thing, and it was going to be something that people remembered. So we were able to get it with the exchange and secure it, and sure enough, here we are, kicking off with a conversation about it. And when you're buying shares of a company that you like, and you're able to remember what the ticker is so that you can tell your friends about it, I think it's a great ticker to have, and happy to have it. And we just try and embody it, I guess is maybe a good way to say it, as best we can. And like I say, coming back to being best in class and what you want to try and use for replication, being a stud horse. So for us, that's where it came from, and it's been fun, and we try and keep having fun with it.
All right. So, before we delve into Stallion, you tell me about your projects and the latest drill program. I want to ask you just how it is being a CEO in the junior mining sector. I mean, you can just pull up the stud chart, and obviously, you guys were kind of riding high in mid 2023. So, literally a year ago, your share price was around 50 cents, probably feeling pretty good about things. Maybe a lot of anticipation because you've got this big project package in the Athabasca Basin in a bullish sector, and now fade the scene a year later, and anybody can see the chart. How do you ride and deal with the highs and lows, as a CEO in this sector?
Yeah, I think that's a great way to look at it, is highs and lows, and it is a ride. You have to know that we trade in cycles, and there's times when things are you know incredibly bullish and optimistic about everything, and then there's times where nobody will give you any credit for anything that you're doing, and you're at the low, and it really is sentiment. It's what's happening in broad markets, it's what's happening in your specific sector, and then of course where you have some influence, what you're doing on a company level, and what the company's been able to do and produce. So as a CEO in that position, I just continue to do everything I can to put one good foot in front of the other and create value with methodical, logical decision making processes, and continue to follow the data from our projects to make sure that we're doing the right work in the right places. And it's you can't say I'm just going to ignore the stock price, because we do still have to listen to it. Obviously, we have to use the capital markets to fund our endeavors to continue to go forward. But there's times where you definitely get misalignments. And one of my favorite investors, who I read a lot, and his books, is Howard Marks, and he's always been somebody who's been able to take advantage and realize that pendulum swinging of momentum. And he takes his investment process into those distressed assets that he think are still good, and buys them when nobody else wants to, and sorry, when nobody else wants to, and then is able to benefit from that. So I think it's different in the CEO role, but it's also realizing that those things happen, and as long as you can continue to show that you're doing good work that has value, there's going to be times where the market really appreciates that, and there's going to be times where the market doesn't appreciate it at all. And especially in junior exploration, I think that sort of sentiment is taking to a manic level at times, where things just swing that much more dramatically. So, for the mindset for us in the industry that are working at these companies, leading these companies, it's an optimism about the sector you're in, and the projects that you have, and really relying in the team that you're able to build. So again, the factors that you do have control over, and you just lean into what you have control over and keep making good decisions. And it's sort of and maybe I'll try and say it this way, where it's it doesn't matter until it matters, and then it really matters is a saying that I've always liked, and it's always sort of a risk management thing. But I think when you're taking on good projects and doing good work on them, and the market just is ignoring it, and I think we've had some of that with our recent drilling, but it gets you to a position where once the market pays attention or wants to pay attention again, there's a lot of value there that, again, that value can matter all of a sudden, and things can really move. And I think that's the position we're in. I mean, we could have new buyers come into our stock today, and if we get back to the level where we raised our last financing, they've tripled. That's an incredible risk reward, and we've done nothing but good work between those two times. So incredible opportunity, but again, it takes a slew of good things going your way, or the sort of overall junior space, your sector, and then again, when you're doing good work with the company, you just have to sort of hang in there for the other two to come around. Long-winded, but
yeah, no, that's good. That's good. Yeah, I like the way you said it. It often doesn't matter, until it matters, and then it can happen very quickly. And we've seen that a number of times in the last couple of years in the junior mining sector, where companies are pretty sleepy, they're dormant, and then one hole sort of changes, the game. So tell us about the Coffer project. I guess it's your flagship, and the Appaloosa target at Coffer. You just drilled 3 holes there. I invite anybody who listens to this on YouTube over the coming weeks to pull up the presentation and look at some of the slides. Slide 8 is very instructive about the Athabasca Basin and what Stallion is targeting, and then look through the property map. Various mines that are in operation in the area, and then sort of all the other stuff that led to the drill program. So tell us about Coffer.
Yeah, Coffer is one of our 100% owned projects. It's now our most advanced. Obviously, we've brought it all the way through from regional surveys to more targeted on the ground surveys that led us into our maiden drill program. And with Stallion, I'll just maybe go a little broader first. Was we tied up 3,000 square kilometers in the Athabasca Basin, in the Southwest Basin, biggest landholders there. And it was our strategy to be able to start really big regional surveys and then only focus in on the very best prospective ground. So, we're really cherry picking, the 0.01% of our land package that we think is going to be worth drilling. And our Appaloosa target was the most advanced that we're bringing along that sort of roadmap. So we got out there to drill test that target at the beginning of March this year. And the Appaloosa target is only 13 kilometers west of Shea Creek. So, again, everybody always says you're just trying to say a closeology play. But in mining, it's always important to know that there's, big potential right next door. If you're able to look at historical records that show, hundreds of drill holes that you can then use as a data set, that's a huge advantage for us. So when we've gone out there now and drilled our 3 holes, all of which hit anomalous radioactivity, and most importantly, our last hole hit our big graphitic structure. These graphitic structures are like the plumbing that's underneath these uranium deposits. So we've been targeting unconformity and basement hosted uranium. And for us to be able to hit this structure, and we hit it 150 meters below the unconformity, we now know that for an unconformity style deposit, if we chase this structure up dip, and now again, we're not targeting a geophysical anomaly that's an area, we have the exact location of this. We know the angle at which it's dipping because of our drill results. So very informed knowledge that we now have to chase this up dip. And what we put out with our latest press release on that cross section was that we were then able to take all the data we had from those 3 holes, as well as the publicly available data from Shea Creek, and say, look, we could have one of these Shea Creek deposits up dip at the unconformity, and we would have drilled underneath it and missed it. You know, we would have got some sniffs around the edges, which again we did. We did have anomalous radioactivity both at the unconformity and above background in the graphitic structure as well. So it's telling us there has been, you know, uranium mineralization in this system. It's fertile, and the important thing now is we're seeing a lot of the, you know, similar geological features that Shea Creek has. And Shea Creek is a 100 million pound deposit. So when we look at everything that we have and we say, you know, we could potentially have one of those, and when we look at the structure that's underneath the Shea Creek deposit, our structure is actually slightly larger at the depth that we drilled it than that similar depth at Shea Creek. So, you know, for us to be able to go with 3 drill holes, find this structure, show that it is fertile, that it had advanced or anomalous radioactivity in it, and that it's big enough to host, you know, potentially at least a 100 million pound deposit is incredibly exciting for us. So, you know, we have a lot of very good things that came out of that drill program. And, you know, to touch on what we did at the beginning, you know, the market yawned a little bit. It wasn't a discovery, but when you're in the Athabasca Basin, you know, the ability to have that level of success in a maiden drill program was absolutely huge. And, you know, I've done what I can to try and set the market expectations of what you're going to get from a maiden drill program. And if people think you're going to drill, you know, 10 meters of 5% uranium on your very first couple of holes, you know, that's misguided expectations. So for us, we know every company that's made a discovery in the basin sort of has a roadmap of, you know, 1, 2, 3, 4, 5 things to get to that discovery hole number 5. We just, you know, sprinted from 1 to 4 with this drill program that we've done, and all the work that preceded it. So, you know, we really are right there, and we have very good targeting on an area now that we think could be that discovery hole. And when you have a discovery hole in the Athabasca Basin, it is an absolute game changer. I mean, we look at F3 Uranium, who is on the project boundary of our coffer project, went from 25 million to 150 million on the back of their discovery hole, now a $200 million market cap company, which, you know, when you're looking at Stallion trading at 10 million is an absolute huge amount of shareholder value that can get created. And for us, you know, that's where we think it's, you know, incredibly exciting. I mean, and incredibly cheap on these valuations. But, you know, it's taken, you know, a good amount of work, a good team. But I think that's what we've been able to show, is that we've done a lot of very good things, and it's not mattering as much right now. But when people, again, I think, want to look at a junior explorer that has the potential to make a discovery on their advanced target, let alone the other top tier targets that we have across our land package, you know, I think we are going to be at the top of that list when people start to look at the junior uranium exploration space again. And that's when you really get, again, the sort of panic swings going the other way. So we're in the trough of it now, but we've done incredibly good work. We've got, you know, other projects outside of Appaloosa, but a great project in Appaloosa that's continued to check all the boxes, and warrants that we get back with a follow-up drill program and have the potential to make a discovery, which is incredibly exciting. Oh, I think you might be on mute still, Robert.
Oh, talking to myself. I'm a pro at this. Really, I am. Yeah. So you're your share price prior to the June 12th news was 9 cents, and now it's 6.5. So the market took that news that you put out on June 12th, with a somewhat positive, headline, and they took it negatively and sold the shares. So let's sort of delve into that. Like, what's the market's interpretation, and if you think the market's interpretation is wrong, why? I mean, I'm looking at the diagram from news release figure 1. Tell me what you learned from hole 3 at the Appaloosa target, and did it go deep enough that you actually got new information in terms of the plunge and the strike of your target area, related to the unconformity?
Yeah, I mean, that's where hole 3 was. And again, fortunate. And I will say that, I mean, you need a little bit of luck to go along with all of your work. And for us to have hit this and intersected this structure on hole 3 was a game changer, because again, our other holes, while productive in teaching us about the geology of the area and that it is fertile with anomalous radioactivity, it was getting this structure and knowing exactly where it is, where it's dipping, the size of it. Again, very important. This is the plumbing of these systems. So we actually, with the geophysics work that we do, we're not targeting uranium itself, because we can't actually target that with these surveys. So what we're targeting is the graphite in these muds and clays that is conductive. So that's why when you hear about exploration in the Athabasca Basin, you hear about these conductors, and everybody wants to map out and find them. And then there's other features that you're looking for that go alongside with them that would give you the potential structure area. So this was the drill hole that hit the target, so to speak. It was our bullseye drill hole, in that we hit the structure that we were looking for. We hit it, a little deeper, 150 meters below the unconformity. But now knowing, exactly where it is and being able to chase it up, again, we're talking about moving a drill hole maybe 150 meters or 200 meters on surface, which when you're covering, the 3,000 square kilometers of land that we have is very minute. So for us to be able to have, again, that much more precision in our data just allows our targeting and probability of success to increase that much more. And I think, as an Explorco, if I could just, continually increase my probability of discovery success with every round of work that I've done, you're doing an incredibly good job. That's our whole rationale for doing the work that we do, is to, find the areas that we want to be in and sort of de-risk them, increase that probability of success with each work program that you do. And again, the drill bit is the ultimate truth teller. And this was the one that, told us a lot and said, here, you've just increased your probability of success that much more, because we're able to really zone in on the targets that we want to have going forward. And again, I mean, to reference that graph, I mean, we modeled, that's the Ann deposit, one of the 4 deposits that make up Shea Creek. Right next door, again, 13 kilometers away in the basin, is not that far away. We're showing that there's 100 million pounds that could be just above our drill hole. And that's what we're really going to target. And that's what we're looking at. And I think it's important, when you sort of understand the structure of how some of this mineralization happens, you kind of get these zones and these big features. And then, your target area that can have these, big mineralized pods of uranium. I mean, you look at the Patterson Lake Trend, it's got the Triple R deposit, the Arrow deposit, and the Spitfire deposit. Those 3 deposits all in a row that are bringing a tremendous amount of value to the Southwest Basin. But when we're able to show that, Shea Creek deposit is very close to us, and it shows a lot of the same features, and we're able to use, again, data from hundreds of drill holes that are publicly available to us now, in concert with our own drill data, we've just got so much more data to tighten up what our models look like, and where we want to target next. And again, it's those next targets that for us are incredibly compelling, because we think we've increased our probability of drilling success, in a huge way with this drill program.
Yeah, I mean, it makes a lot of sense. And the market is saying that there's a less than 1% chance that you have a Shea Creek on your property. So it's the valuation, it's price for failure, which gives a lot of upside potential in the event that you have the goods. It's usually the kind of setup that I like in a junior mining stock, although one can have too many of these sorts of plays. At times, the out of favor ones that stay out of favor for a while. But I like the news on June 12th. I guess so. So what's next? I mean, you're going to put out the assays. The market's already priced in that you're not going to have much joy in the assays. But then how do you point to the future?
Yeah, exactly. We do have the assays, and again, we have our counts per second, so we know the radioactivity is there. We know the assays aren't going to surprise us in any way, and we got the information that we need from that the structure is fertile. So for us, it's showing that we're going to continue to advance this. We now have what we think are incredibly compelling targets. And again, this was a huge step forward for Stallion, because we've gone from greenfields exploration over a big package that, again, if this was the Eastern Basin, our project would have 1,000 drill holes in it. We just put the very first 3 drill holes in it, and it's really about the area just hasn't had the infrastructure build up. I mean, we've seen exploration in the Eastern Basin because they've been exploring there for 50 years, and you have the infrastructure build out of having mines and mills there. And I mean, again, you look at the news this morning, Paladin Energy looking to take out Fission, NextGen getting further advancement on their permitting. We think that is all coming to the Western Basin, and we tied up some of what we think are the best targets in the Southwest Basin and are advancing those. So not only do we have our most advanced Appaloosa target that we think has a high probability of discovery success very near term, we've got 5 or 6 other key target areas that we think are top tier targets, not just in the Southwest Basin, but in the whole basin. And if they were in the eastern side, they would have been drilled 30 years ago. So there's an awful lot of upside potential. And I think what's important for shareholders in the market to realize with Stallion is, we didn't end up having the success we had at Appaloosa by mistake. We are following a very systematic approach and being very pragmatic, following the data. What are the best target areas to go after? And by doing that, we think, really, again, increasing our probability of success, putting our drills in only the very best location that we can. So we're going to try and continue to bring on other targets towards drill readiness. Again, with the more advanced Appaloosa, we think that's obviously going to be the potential game changer. And the other big thing for us is, when we talk about, why is the market not paying attention to it? I mean, I think, there's a lot of talk in the junior market space about where, the investors have gone sort of across the board, but we are incredibly bullish on the uranium fundamentals. I mean, that is why Stallion came into this space. I mean, and that was, $40 uranium. We're still at $95 uranium. We think there's a lot of cause or rationale that the market could, really start to run again, and it would take maybe that level of excitement. But then when that starts to happen, I think that's when the market can look at us and go, holy shit, these guys have done a lot of good work over the last year and a half. If I want the torque that a uranium junior explorer can give me, I want people that have done a lot of good work and, one, aren't getting realized on some of that work that's already done, but have that potential near term. And with a junior company, it's not about getting in, after discovery. Yes, there's still, a tremendous amount of upside there. I mean, you look at Next Gen, I think, was about a 400 million market cap on their maiden resource. They're now $6 billion, and their discovery was only 10 years ago. So there's a lot of upside potential, but you also have that sort of overnight move. I mean, the most recent one was Canalaska, 40 cents to 70 cents on their West MacArthur discovery hole. So there's a tremendous amount of value of getting into these names like Stallion before they have that exploration or that drilling success. And again, it's that rationale or investing mindset of a little bit goes a long way. I'm not saying, invest your whole portfolio in risky junior mining stocks. But again, if you look at the uranium sector, you've had some great moves in the developers or the producers, and get a little exposure on the sort of down and out junior explorers, because when the space starts to go again, they can move very, very quickly.
Yeah, you're preaching to the choir here when you're talking to me about that, as you know. But yeah, I like Stallion. I like it. The only thing that concerns me as an investor, and this is probably the same concern I have with every other junior mining company, some more than others, is how do you finance the next phase of drilling at Appaloosa, and how much is it going to cost you?
Yeah, our maiden program there was $2 million for those 3 holes. We think we can do better than that if we go back out there. One, obviously, it's the same area. The trail has been built 12 kilometers off the road, that sort of thing, and having a little bit more lead time. Again, when we're coming out at the beginning of this year, we financed in February and we're drilling in March. So if you've got some more lead time on setting things up, you're able to save some money. So we think we can be a little bit more efficient in a follow-up drill program. Again, we've learned a lot of the information that we need from operating up there for a couple of months during that program. So for us, it's leaning into our shareholders. We've had a great shareholder base. I mean, Stallion is held very strongly by 3 key individuals. They're the group that put together Hathor Exploration, so they've created a lot of shareholder value in the Athabasca Basin. Hathor, of course, found Rough Rider, which was then sold to Rio Tinto after a bidding war with Cameco for 650 million Canadian. So we've got a big backstop of key investors that have continued to support us as this story progresses. And again, for us, we've moved in a very big way from greenfields exploration that's maybe a little bit too early stage for some institutional holding, to now being an advanced explorer that has some drill results, has very good prospective targets from those initial drill results, and then just the huge amount of value from the other top tier targets that we're still just starting to scratch the surface on. So getting to that level has opened the doors for us for more advanced talks with some bigger institutional investors alongside retail investors. And it's a difficult capital markets conditions out there right now. You can't sugarcoat that. I mean, everybody sees the chart, everybody sees what's going on. But again, there's going to just be an incredible amount of value at this level that starts to turn the eyes of the people that are in this space, and again, backing the vision of what we've done, the structure of what we've done, and the results that that's been able to bring to the market. So, I continue to be very optimistic that we're going to be able to finance going in the open market. Last week, I want to continue to build my position. I think I've been the most excited as I ever have been about our prospects going forward, and that's because we continue to do good work. So I'm always more excited because the work that we get done just has pointed us in the right direction time and time again. So fortunate to have that. I know that's not always the case in junior exploration, but everything that we've done so far has just continued to tell us to build and do more. So that's what we're doing. And again, just have to fully, continue getting that story out there and getting in front of the right people, because it's a story that I think resonates, and it's a story that has a terrific amount of upside value for shareholders that are willing to believe in the vision that we're putting out and executing on.
So final question, Drew, and I really enjoyed this conversation, and I've learned quite a bit in this half hour. Let me ask you one more question, then we'll see if the audience has a question, then we'll call it a day, and we'll do it again in a couple months. You have a couple of gold projects in your portfolio, which is a little unusual for a uranium company focused on the Athabasca Basin, but one of them really stands out, and that's the one I want to ask you about, the Horse Heaven project in Idaho, which is near the Stibnite gold project. I think most mining investors have probably heard of Stibnite. It's been around. It's had quite a history. There was big antimony mining there during World War II, and sort of created a bit of an environmental residue, shall we say. Perpetua is like a $600 million market cap, and they just got some really positive news from the federal government. So tell us about Horse Heaven, and how can Stallion monetize this or get some value for it?
Absolutely, and I'm glad you brought it up, because again, right now I don't think we're getting any value for it. It's sort of hidden in our back pocket, so to speak. But we've been bringing that project along over the last couple of years. It was our initial project, which is how it's in the portfolio. It's why it's still there. But we've done a lot of work to bring that up to get ready to drill test it. But it really has been very much a story of what's happening next door. And we've been saying that there's going to be catalysts that were coming to the Stibnite project with Perpetua. And then at the beginning of this year, those catalysts started to come, and they started to come through, quickly, one after the other. They've had $60 million of Department of Defense grants for their antimony production and processing. They signed a $8.5 million silver royalty with Franco Nevada. They've now also had a $1.8 billion letter of interest from the U.S. Import-Export Bank for financing to bring their project forward. And they're just now going to be waiting for their draft record decision to be able to bring this as you said, sort of old, sort of beat up mining site back into production, mine it for 15 years, and then leave the site much better than it is. Again, I've been on that site a couple of times. It's a mining site that we walked away from. I mean, that site was mined for about 1 million ounces of gold, but also about 90% of the U.S. tungsten during the war effort. So, it was a very instrumental area. So for us to see that project go ahead, we think is going to create a lot of value for the state of Idaho, for Perpetua. And again, with these catalysts, as you noted, they've moved from about a 300 million market cap to a 600 million market cap this year alone. So they've already doubled on the back of these catalysts. And I think the next big catalyst will be that draft record decision that's coming quickly. And our site, we have known gold, shallow oxide gold, from historical drilling. We had a historical tungsten mine as well. So tungsten, just like they had at Stibnite. And we also have antimony on the site, and on our secondary target, which is named Antimony Ridge, had historical antimony production. So there's a lot of potential on the critical minerals, which are very important in the U.S. as they work to step away from China's reliance on those critical minerals, especially tungsten and antimony that are used by the Department of Defense. So we have been in discussions over the last couple of months, and continue to have those discussions on the best way to monetize this, or have our shareholders get some realized value that we're believing we're not getting anything for right now. And I hope that's something that I'll be able to bring to the market in the coming weeks or months that have shown the decision point that we have there. Because again, we think we're incredibly undervalued as a uranium exploration company. We think we're not getting any value for this Horse Heaven asset, and given all the catalysts that are happening right next door, we want to see it advanced. But again, we want Stallion to be very focused on uranium, so we want our shareholders to get value, but without seeing that advancement within the Stallion uranium structure. So again, I think there will be something near term that we're going to be able to show Horse Heaven some great value there, where we're getting none right now. And I think that can be, especially from this valuation level, a bit of a catalyst for value in itself. Because again, we've got, gold near all-time highs and, two critical minerals that are very important to the U.S. economy there, that we're not getting any love for. But again, hoping to have a transaction that we can discuss in the public in the near term.
If anybody has a question for Drew, this is your chance to ask it and be on record as having asked it. Yeah, I can tell you that you're not getting any value for horse heaven. And with a very high degree of confidence, you're not getting any value for horse heaven. So if you can find a bag of money there, that would be a big win for Stallion. Definitely, I mean, great project location. The timing couldn't be better. State of Idaho is in an uptrend as far as a mining destination in the U.S. So there's a lot to like about horse heaven. So hopefully you can put the ball in the end zone there by the end of the year. Doesn't look like we have any questions. I think I got to all the key points. Drew, this was a great conversation. I learned a lot about Stallion. I look forward to doing it again in the future. Go Panthers.
Absolutely. Thanks for having me on, Robert. And I hope you don't hold it against me when the Oilers walk away with the cup this evening.
We're not talking again if the Oilers win tonight. All right. Cheers, everybody. Thanks for tuning in. Thank you.
All right. Thank you.